As 2025 draws to a close, gold and silver are stealing the financial spotlight with a dramatic and unexpected year-end rally. Investors and analysts alike are watching in awe as these precious metals surge to levels not seen in years, capturing headlines and sparking conversations across the globe. This isn't just a minor blip on the radar. Prices are skyrocketing, reflecting deep anxieties about the global economy and a growing sense of uncertainty among investors. The surge is making waves in financial markets everywhere. For thousands of years, gold and silver have been trusted as safe havens in times of crisis and instability. Their enduring value has made them a refuge for people seeking to protect their wealth when other assets seem too risky. Today, as global markets wobble and major currencies weaken, investors are flocking to these metals for security and peace of mind. The rush is visible everywhere, from trading floors to local bullion dealers. December 23, 2025, marks a textbook flight to safety, with both seasoned investors and newcomers piling into gold and silver. The demand is so intense that some dealers are even reporting shortages. This powerful rally is the result of a year's worth of economic shifts, sweeping policy changes, and escalating global tensions. Every headline, every policy announcement, and every geopolitical event has played a role in fueling the surge. From central banks making bold moves to conflict zones rattling investor confidence, a perfect storm of factors has come together to drive gold and silver higher than anyone expected. Understanding why gold and silver are booming right now reveals key lessons about risk, reward, and the psychology that drives markets in turbulent times. It's a story of fear, strategy, and the timeless appeal of tangible assets. Whether you're actively investing or simply following the headlines, this unfolding story offers crucial insights into the powerful forces shaping our financial future and the decisions we make with our money. Let's break down what's really driving this historic rally, and what it could mean for the months and years ahead. The numbers are staggering. On December 23, 2025, gold hits $4,297 per ounce, up over 70% this year. Silver's rise is even more dramatic, reaching nearly $70 per ounce, a 140% surge. Silver's dual role as both a monetary and industrial metal has supercharged its demand. The gold-silver ratio is narrowing, showing silver's outperformance as investors chase returns. These record prices aren't just headlines. They impact everything from jewelry to manufacturing costs. For investors, the returns have been extraordinary, rewarding those who sought safety early. The scale of these gains signals a profound shift in global financial sentiment. The Federal Reserve's recent pivot is a true game-changer for precious metals, sending ripples through global markets and shifting investor sentiment almost overnight. After a year of persistently high interest rates, the Fed is now signaling a series of rate cuts as the economy shows signs of slowing and inflation finally begins to cool. This shift marks a dramatic reversal from the tightening cycle that dominated headlines just months ago. Lower rates make non-yielding assets like gold and silver far more attractive, especially as traditional savings accounts and bonds offer less return. Investors are acting on expectations, not just official policy changes. Buying metals ahead of the Fed's moves, betting that the value of gold and silver will rise as the dollar weakens. This anticipation has been a major catalyst for the rally, with prices surging as more investors rush in to secure their positions before the next policy announcement. As rates fall, the opportunity cost of holding gold and silver drops, drawing in more capital from both institutional and retail investors seeking safe havens. The feedback loop is powerful. Rising prices attract more buyers, fueling further gains, and creating a sense of urgency in the market. The Fed's shift is the single most important factor behind this historic surge, overshadowing even geopolitical tensions and supply constraints. Investors are repositioning for a new era of loose monetary policy, adjusting their portfolios to benefit from what could be a prolonged period of easy money. The result? A powerful bull market in gold and silver that shows no signs of slowing, as confidence in precious metals continues to build. The US dollar's sharp decline in 2025 is amplifying the metals rally, sending shockwaves through global financial markets. Investors and analysts alike are watching closely as the greenback loses value at a pace not seen in years, creating ripple effects across asset classes. Gold and silver are priced in dollars, so a weaker dollar means higher prices for these assets. As the dollar falls, it takes more of them to buy the same ounce of gold or silver, making these metals more valuable in dollar terms. As the dollar drops nearly 10% against major currencies, global demand for metals surges. Investors worldwide are seeking safe havens, and precious metals are once again in the spotlight as reliable stores of value. Lower US rates drive investors out of dollars and into other currencies, and into gold and silver. With yields falling, the opportunity cost of holding metals drops, making them even more attractive. International buyers, armed with stronger currencies, are snapping up metals at record rates. For them, gold and silver are now more affordable, fueling a surge in cross-border purchases and intensifying competition for limited supplies. The dollar's slump is a key tailwind, making gold and silver more attractive worldwide. This global appeal is drawing in both institutional investors and everyday savers looking to protect their wealth. This trend is expected to continue as the Fed eases policy further. With more rate cuts likely, the dollar could weaken even more, providing ongoing support for precious metals. The dollar's weakness is reshaping global commodity markets and boosting precious metals. Traders are recalibrating their strategies, and gold and silver are emerging as top performers in this new environment. As long as the dollar remains under pressure, gold and silver are likely to shine. Their resilience is drawing attention from both seasoned investors and newcomers to the market. The greenback's fall is truly a golden lining for investors, offering both protection and opportunity in uncertain times. Global instability is turbocharging demand for safe havens. Ongoing conflicts in Eastern Europe and the Middle East keep risk levels high. Gold's appeal as a crisis hedge is stronger than ever. Its value isn't tied to any government or company. Each new flashpoint, from Russia-Ukraine to Middle East tensions, drives more investors to metals. Even regional disputes like U.S. actions against Venezuelan tankers add to the sense of uncertainty. The fear trade is in full swing, as investors seek to preserve capital amid rising risks. This combination of fear and financial incentives is fueling an exceptionally bullish market. In 2025, economic and geopolitical anxieties are working together to power the rally. Central banks and big investment funds are piling into gold and silver. In 2025, central banks are set to buy 850 tons of gold, still a massive figure, even if slightly below last year's record. Their buying diversifies reserves and hedges against currency risk, sending a strong market signal. Gold-backed ETFs are seeing their largest inflows since 2020, with $82 billion pouring in. Silver ETPs are also booming, with over 4,000 tons added. These institutional moves create a solid demand base, supporting prices, even if retail interest wanes. The message is clear: both official and private investors see lasting value in precious metals. This institutional support is a critical pillar of the current bull market. Soaring prices are reshaping gold demand, especially in India. Traditionally a top gold consumer, India is seeing jewelry demand drop 26% as prices climb. Many families are postponing or scaling back purchases, making gold less accessible for celebrations. But investment demand is rising. Gold bars and coins are up 13% as savers seek protection and profit. Indians are distinguishing between gold as a luxury and as a financial asset. The investment surge is offsetting weaker jewelry sales, keeping overall demand robust. This split shows how high prices can both deter and attract buyers depending on their goals. Even in price-sensitive markets, a strong rally can create its own momentum. India's story highlights gold's dual role in culture and finance. The gold-silver ratio is a key indicator of market dynamics. Early in 2025, it took 105 ounces of silver to buy 1 ounce of gold, signaling silver was undervalued. As silver's price soared, the ratio dropped to 64, showing silver's outperformance. This convergence is typical in late-stage bull markets, as investors chase higher returns in silver. Some analysts warn the rally could cool, with silver potentially underperforming if volatility rises. The gold-silver ratio will be crucial to watch in 2026 for signs of market health. For now, the narrowing gap confirms a powerful, broad-based rally. The ratio's movement tells the story of shifting investor appetite and market momentum. With gold and silver at record highs, what's next? Most experts see the rally continuing, driven by rate cuts, a weak dollar, and global risks. Goldman Sachs predicts gold could hit $4,900 by the end of 2026, but caution is warranted. Sharp pullbacks and volatility are possible, especially in silver. The key is to focus on fundamentals, loose policy, a weak dollar, and ongoing uncertainty. For everyday investors, this rally is a lesson in diversification and the enduring value of hard assets. Gold and silver's performance in 2025 proves their relevance in modern portfolios. As the new year approaches, the story of precious metals is far from over.